Will the market crash before the end of 2020? That's a question that a lot of people think about and may wonder about because when you have a market collapse, you usually have panic setting in. You've got the market moving wildly and very volatile moves, and those volatile moves are translating into volatile moves within your trading account or within your 401k account or your investment account. And so there's a lot of money at stake. Money's moving up and down pretty quickly. And so it can create that emotional tension inside of you. The crashes and the collapses are generally believed to be created by some type of external event going on. And so the question is can these crashes or collapses be forecasted? And my answer to you might surprise you. I do believe that there is an element of prediction that could be applied to it. But how we could figure out if there is one coming might surprise you. And we're going to be taking a look at a style of analysis called Elliott Wave. Now, we're not always going to be right with this style of analysis, but the waves generally do fall within form of what we see within the market. And so I want to share with you today a little bit about Elliott Wave and try to assess whether there could be a collapse or a crash coming here before the end of 2020. So first of all, when it comes to Elliott Wave, collapses and crashes tend to appear when the market is in a correction mode. Seems like a no-brainer, but think about it for a minute. How many times have you heard about the market crashing to the upside by 10%? It doesn't happen. So when the market is peeling back some layers and reducing its price and its value, it usually moves to the downside a lot quicker than it moves to the upside. So I've heard the old adage that it takes a lot of buying power in order to push the market higher. So if you have a lot of increased volume and buying power coming in, a lot of buyers, that's going to push the market higher. Well, it could be an overwhelmment of sellers, or it could just be a lack of buyers that pushes the market lower. And so that's why we tend to get these air gaps, air pockets to the downside where the market moves quickly lower. Secondly, we can go out and we can estimate when a bullish trend is over. So if crashes and collapses are going to tend to take place during a correction, we can go out and we can provide an estimate to determine whether the bullish sequence is over and whether we're entering into a correction mode. So that's kind of the first thing we want to look at is, are we in a corrective mood of the market? From an Elliott Wave perspective, we can determine where we are at within a trend by taking a look at this idealized map of an impulse wave. An impulse wave is one of the foundational patterns. There's 5 foundational patterns. Impulse wave is one of the 5. And if we can go out and if we can count the 5 waves on the chart, that will tell us that that bullish sequence is over. So the left, we've got the bullish sequence. Once that bullish sequence is over, if we start to witness a bearish impulse wave, then that will tell us we are in a corrective mode and that the market could be prone, if it's at a large degree of trend, of moving harshly to the downside. So taking a look at the Dow Jones Industrial Average on a weekly chart, we can see a completed 5 waves higher, beginning with the lows of 2009. So we've got wave 1 here, wave 2, then we've got wave 3, and then a complex, wave 4, and then the March low to the September high created that 5th wave. Now, how do we know whether this is 5 waves or not? There's wave relationships that I'll go out and take a look at that will help determine or at least provide evidence that we are indeed looking at a bullish sequence. Number 1, we can count the waves, so we can count 5 waves in. Number 2, if we come out here and if I add a Fibonacci retracement level from that low up to that September high, you can see we've got a 38% retracement level coming in around the territory of where the previous 4th wave extreme is. Now, it's not quite at that same level. It's a little bit lower near that 16,350, but it's close enough, as they say, for government work. And so we've got a wave 4 low that is appearing near the 38% retracement level. That always doesn't have to happen, but that's a general guideline that will give you an idea whether this is a completed impulse wave or not. Now, this guideline is when you have an extended or extra long third wave, which we have here. Notice how wave 3 is the longest of those 5 waves. So it appears we have a completed impulse wave. Now, what happens after an impulse wave? Now, for that, I'm not going to spend any time on that because I've got a video that I've created just for you on what happens after an impulse wave. I would encourage you to go ahead and watch it. I'll have it linked into this video below. But real quick, we would be looking for a move back to and possibly below that previous 4th wave extreme. So we're in correction mode. We can, or at least we can count 5 waves up from the 2009 low. I tell you what, let's dial this in even a little bit further. Okay, so here we're taking a look. I'll tell you what. Let's dial this in a little bit further. And here we're taking a look at the price action since the 2009 low. And from that low, we can count 5 waves up. And this matches all of the Elliott Wave rules with regards to the various patterns that form. Wave 3 is not the shortest of waves 1, 3, and 5. Wave 4 does not enter into the price territory of wave 1. So wave 3 extends beyond the end of wave 1. So it matches all of the rules. So this can be counted as a completed impulse wave, 5-wave move. So this is a clue that the market is finished at that September high. And as a result, we're going to be looking at this structure and this correction from that high to determine if it is beginning to shape that bearish impulse wave. Now, we did identify on September 4th, we did identify a high probability retracement zone into this 22 to 24,000 area. So that is still valid, still high probability zone. And if indeed we're going to see a collapse or a deep correction taking place, we're probably going to be entering that zone fairly quick. Moving on into a 30-minute time frame. Got a couple of price channels out here for you. This first one, we've got a corrective price channel going all the way from that September high, and you can see how the waves are very nice and neatly shaping within this blue corrective channel. So this was the end of wave 1 and then the end of wave 2 up here. So this is the key level. If prices do break above this 28,375, then this will alleviate the pressure of a potential collapse coming in the Dow Jones Industrial Average. So we came close to it earlier today, but we still have hung below it. And we're, I think what we're going to see is price moving back here to retest the top of this channel, possibly, moving back inside this channel. So we've got an impulse wave lower, correction higher, impulse wave lower. Looks like we've got a correction higher. And then if that's the case, we could be working down into lower levels. Now, an area to watch out for is going to be about right here. I think it's a high probability that we're going to see prices move down into this 27,000 to 27,400. We could see that in the next couple of days. How price behaves from here is going to say a lot whether this crash or collapse could be coming. If it rebounds higher, then we may come up and we may break up above 28,375, which would alleviate the pressure of a near-term collapse coming. If prices sell off down into this box and seems to be like a hot knife cutting through butter, then we may see even lower levels. In fact, if we break on down below this low right here, near 26,500, if we break on down below here then that will indicate, watch out. There could be some aggressive lower pricing coming. And that 22,000 to 24,000 that I identified earlier, easily touch that. So we're not out of the woods. If we break on down below that 22,000, that could really spell trouble, and we work ourselves down to 18,000, possibly even 16,000. There's possibly even lower levels than that. Of course, that would take several weeks to several months to perhaps pan out. I don't think it would all happen in a couple of days. So a couple of areas to watch out for here in the near term are going to be, for the next couple of days is 27 to 27,400. The behavior that takes place in that area will give us an idea whether there's even lower levels coming. If we break on down below this 26,500, that really spells trouble. But I want to share with you, we've been watching and tracking this pricing for quite some time. Back on September the 4th, this is what I'd written to subscribers, that I suspect that Dow Jones is going to plummet to 22 to 24,000. Again, this was on September the 4th. So the primary forecast is that Dow Jones sheds at least 40% in the coming weeks and months. Okay, that was September the 4th. Looks like we're still on track for that. Here's what I wrote as late as Friday. That we're still looking at this 22 to 24,000. I've got a couple of potential wave models to look out for above, but that this potential for a collapse is still on the table. The waves are still shaping like it's a possibility. And if it's going to be happening, it's probably going to be happening here fairly soon. The election could be that external event that really gets people riled up and concerned about potential chaos that may result of it, and therefore maybe protecting some of the profits they may have had over the years. So if you want to subscribe to this weekly communication that I provide, check out the links below in the comments section. Also, give me a thumbs up or give me a comment if you're interested and would like to see more videos like this. Look forward to hearing from you. And until next time, just remember, if it's possible for the crash and the collapse to happen, can it be forecasted? I think yes, it can if the conditions are ripe, and we do have ripening conditions for something like that to possibly happen. So best of luck with your trading. We will talk to y'all soon. Y'all take care. Bye now.